in studio who was already about to start answering questions. Pete,
good morning, Brooke.
Commodities check. We're officially away.
Good morning, Carson.
Yeah, let's go with the iron ore price. Talk.
Nearly 125. I mean, it's very strong. Look, there's no doubt that I think the way it's going at the moment, Brooke, we were saying 125 to 130 is very achievable by year end, and I think at the way that the market's trending, with some fairly positive equity markets in the US, that seems to be pushing things along, and it seems to be just heading it to the right direction at the moment for the miners.
Is it a possible kind of squeeze going on in that market when we get towards the end of the year, or anything kind of silly like that?
Some of the numbers coming out of China as far as refined copper output, refined steel, you know, the copper production is very, very strong. So I think just overall, that's been, you know, they've run down inventories now at the point in time that 125 is still cheap compared to what we were 170 to 180 range. So overall, I'm sure that it's a little bit of happiness both sides of the market.
Margie on my Twitter, Carson, you'll like this. Margie on my Twitter says, FMG, my bread and butter. No correction, FMG is my jam and cream. There you go. So a few people
Lots
liking
of
it.
cream and all that. Have some nice scones,
Well,
Margie.
Yeah.
Yeah.
It's been, and when you look at what's happened, you know, if you run a graph on, or a chart, I should say, for FMG, I mean, even, you know, BHP sitting just shy of 36. The best part, I think that there's every possibility you should snap 36 and a quarter by Christmas, and I think it's got the potential to be back above 36.50 sometime in January. It's not that far out, but it's had a very strong move to the upside, BHP.
Let's do charts. We love to show some squiggly lines, and here's one.
What's the reality check, isn't it?
5-year S&P, I think it is.
You bet. I mean, you know, there you look at it, you know, we had that massive sell-off, but of course with the GFC running down to about 650, but it's had very, very strong move since, and you're running now at about 1430. I think, you know, what we've got to be mindful of, Carson, going back to data, December is traditionally, that Christmas rally is the second best month of the year after July. We go back to data in 1928, we'll see an average of about 1.5% per month for December. Now, we're running at around about 0.8, 0.9. I'm calling that the S&P 1445 by sometime before month's end, and I think it's very, very achievable. So I think there's certainly a little bit more horsepower there, and then that, you know, that Christmas rally.
How would you respond to the comeback on that, which is people saying, Pete, it is overbought? It's an overbought territory. Watch out.
Yeah, but I mean, look, it's been overbought. People have been saying that since it was at 1100. You know, it did.
So water for ducks back.
I think so.
Right,
but look at it, but it's remembering that it's volatile, and you've only got to look at that prior chart to realise how volatile. And you'll probably see it back at, you know, the 1300 sometime in 13. But at the moment, it's upward and onward, and people are embracing it, and it seems to be the place to be. Don't go against the trend.
Oil markets look a bit quiet at the
OPEC
moment.
meeting today, Brooke, in Vienna. 30 million barrels a day is their forecast. There's been overproduction there as far as OPEC's concerned, so there's plenty of supply out there. You're sitting still above $100 a barrel for Brent. West Texas, I think about 85 and a fraction. And if anyone can tell me what's going on with Syria, then, and no one really knows, then it seems to me that the whole, you know, the geopolitical seems, you know, just falling away. There doesn't seem to be a lot of, no great rhetoric coming out. You see what's happening on the TV, and it's a sadness over there, certainly for everyone involved. But it's not pushing crude WTI back towards 100. If anything, it's probably sitting at these 85 levels, and you may see a little bit further downside.
What would potentially, you know, hit the news wires or hit the papers for the oil markets to have to react? I mean, what's the kind of thing you think that the market, as you said, because it's kind of been going on for so long?
Chemical attack on the Syrian people. The Yanks move in, Euro is just totally engaged in the whole process, and, you know, crude jumps 10-15% within a matter of, you know, 48 hours.
Jeffrey Robinson's got a new book out saying it's not out of the question, Mullahs Without Mercy, that we may have to bomb Iran into submission. Is that something you believe could be an event risk for 2013?
Obama's back in power. It could happen. Look, Israel hasn't gone quiet on it. So let's see what happens with Syria. But I think if Syria goes, then that'll be the powder keg to push it back forward into or back into Iran. And I'm sure that they'll have some fun and games sometime in 13 or 14.
What does the hedge play through all of that? Because gold has failed to fire and hit the 2,000 an ounce mark. We've got barely a few weeks left of this year, and a lot of the smart money was saying we would strike that level before 2012 was out.
Well, it hasn't happened. No, it hasn't happened. And considering that we hit 1923, that was our high, it's still, you know, I think every chance to hit 1750 to 1800. I said to Brooke last week, 1800 by year's end or month's end.
Well, Dale Guppy says on the charts, you know, if you get to 1800 and you don't cross it, you could be in for a steep fall.
Yeah.
You could be, and I mean, you know, you've got to understand what chartists, they always look in the vision mirror to tell you what's happening in the future, and I'm not taking that away from them. But you've also got seasonal demand, and traditionally, over the next couple of months, of course, Christmas, and then you've got Chinese New Year, and then more consumption, so the jewellery production numbers.
Diwali, did you sort of notice anything impressive there?
No,
or was it just steady as she
it's
goes?
steady as she goes because there was, you know, because of the Indian rupee. So, you know, I just think it's just a matter of time. We'll just have to, you know, hold on to our hats. But I still believe that it'll be a 2,000 plus play in 13.
All right.
In the past week since we've spoken to you, Pete, what's been a commodity of most interest, either kind of for the technicals changing or the outlook changing or moving into the end of the year?
Well, I
What's
think
catching your eye?
the crude market really has been that's kept me more awake at night than anything else, because I've just been thinking, well, what's happening is there, it seems to be, when markets settle down and they become incredibly non-volatile, if that's the right way to put it, I always expect a breakout, and I'm still, that situation in the Middle East hasn't gone away, and you know, you wake up and every few hours you think, well, has something happened?
Well, I mean, just as you're talking, Barack Obama is saying the US will recognise the Syrian opposition coalition as a legitimate representative of the Syrian people. You've been telling ABC America, quoted on Reuters. What's your response?
Well, look, that tells us everything. So I think that's the next part of the journey will be Clinton back over there, or someone trying to appease the Israelis. Let's go. Let's just, time will tell. It's very, very hard. But when Obama comes out and makes those statements, that tells you, if you go back in time, he did the same in Libya. He's done the same across other countries in the Arab Spring. So I think it's just a onward and upward.
When you kind of consider all of those Middle East issues, it is hard to kind of see a situation where the oil price goes down in the next 6 months, isn't it? I mean,
I can't see it going down, Brooke.
Yeah.
I don't think there's anything to really, you know, push it down. No. Certainly, you know, Euro recessionary fears are a great concern to the better part, and I don't think there's going to be any real growth numbers coming out of Euro as far as consumption for crude. But there's still a lot of emerging markets that are very much on fire. You look at South America, look at India, China, Africa. So the consumption numbers are growing year on year over that part of the world.
You know what just occurred to me as well? We haven't even mentioned QE4, which is about to be announced tomorrow. Back in the QE1 and QE2 days, we would have spent weeks talking about this moment upcoming.
It's a continuance.
Yeah. It's amazing that we can have a whole segment of commodities and we don't even bother mentioning QE anymore, isn't it?
It's more punch, same flavour, right?
Exactly.
Right, okay.
Yeah,
that's
well
right.
said.
Don't over-imbibe. We'll see you next week.
Thank you.
Chief Economist, Chief Market Strategist at NG Farah, Pete McGuire.
Thank you, Carson. Thank you, Brooke.
Well, you can imbibe in something else, arguably, on this next one.
Yes, we're talking